Very good afternoon to all of you. Hi, Jimmy. I think I had the opportunity to meet a couple of you today afternoon. I think let me take this opportunity. We presented a day for yesterday, which many of you have it's uploaded, but let me make an effort to kind of personally take you through a couple of interesting parts. I've tried to make a presentation which kind of touches on a few items. It's a quick one where we kind of touch on, I think I'm taking the opportunity to start with something which we are excited about. That's an end-to-end digital car loans indigenous, which we believe is the first in the industry across India and at times across the world as well, with whatever information we've seen. Why it's relevant is because I think it's something which is not a Me Too product. It's something which we've actually sat inside for hours between us as a team on the business side, credit, operations, and actually come up with the customer at the center and see how we can connect the dots. It took us 2 years. I'm also taking the opportunity to get some dealer feedbacks to give you a first sense of what it is. It's basically, after that, I'm going to cover your retail asset, few tenets as to how I believe probably you should look at us and what's our plans in terms of across products. And a quick memory on what all indigenous stuff that we've done, because I do see a lot of questions at times on the fact that how ready we are on the digital. So let me start with that as well, straight dive into it. So we call it the Express Digital. It's nothing but a end-to-end. Today when customer, 90% of the customers, if you see today, their car buying journey begins online. But if you see, can any of them get dispersed? It's around 1 or 2%, which actually can get dispersed. Today, what happens when you want to buy a car? You land up with a test drive, you land up at the dealership, but you don't walk out after dispersing the case. You predominantly walk out selecting a car at best. So again, it's an open issue. It doesn't help the dealer, the productivities of the financer doesn't go up, the dealer counter guy is still chasing in multiple calls, all that ecosystem. So inspired by a 10 seconds loan, which is of course for existing customers, this product serves the purpose of an end-to-end digital journey. A customer who's not an account holder could walk into my branch and say, I have an account in a public sector bank or another private sector bank, and in 30 minutes walk out with a dispersal to his dealer with a car booked. You can have an end-to-end, you have a seamless across geographies. With the bank that you're hearing, our focus on the semi-urban and rural, with our liability franchise expanding at a rapid rate from here on, you need less to and fro with the customers. And this is going to be pan-India across massive amount of touch points. And of course, it's 24 hours by 7. So you can, considering most of the 90% of the journeys as I began, actually begin online. This could be a great opportunity in itself for us to leverage this at effective cost structures as we go along. So a quick summary of this, 90%, the major assumptions when we started this work, 90% of car buying journeys is online. We're looking at 20 to 30% of our business moving on to this platform, because this is assisted online on multiple platforms. You can do this, even the physical assisted model. You have 40% of annual auto credit products grow in the semi-urban and rural, and that substantiates your case for that belt. If you look at 50% of incremental sales growth likely to come in from that segment, and our reach of this to and fro in the rural, which is far more scattered, I think could really give us a cutting edge there. 80% of OEMs actually are already building a lot of online API platforms, and I think that is something which we could together with them and together with the dealer leverage that strength. Unless we are ahead of the curve, you'll not be able to leverage that. If I can is this the journey? Yeah. So I think let me take you quickly through the journey, and you have a digital head who's also going to repeat this just for you to get a quick sense. The application is around 3 to 5 steps. You go on the Google and everybody searches for a loan. You virtually have this, and then it moves on to your next slide where we've made financing as 3 simple. If your pre-eligible is done, your mobile number is asked, your date, it'll give you various checkpoints, it'll ask you for an OTP, It's kind of moving at its own speed, but just to give you a sense that within no time, I think approximately 5 to 10 minutes, your loan and dispersal can be done if your KYC is already with us. That 30 minutes, that 20-25 minutes has been kept for video KYC in case you're ready and we can do it. So, this builds in massive amount of transparency as well from a governing standard point of view. And the speed of execution across rural and semi-urban. So you set up your EMI mandate, your disbursement letters right there, and that's it, your loan's done. And you're completely seamless, hassle-free, you don't have to carry any documents. So if you're filing respectable returns, I don't think you have a problem at all. Can we have the video, please? This is the video of a couple of dealer feedbacks. If I can just take a minute or two, it might be worth, these are one of the best in the country.
Regarding the express loan which HDFC has launched, and it's a very good innovation from HDFC Bank. So I just told them, take advantage of this. The more faster you do it, the better sales you'll have. In this digital world, the customer doesn't need any verification, or even the KYC will be done on the video call. So I think this will be a very good venture.
I think this new product that HDFC has launched, Express Car Loans, is a fabulous product, and this is one more feather added to HDFC in its cap. First in India, I think first in the world, where such a loan is being happening without any manual intervention and end-to-end digital.
Yesterday I was reviewing one of my GM sales, and he showed me a presentation on how HDFC Bank does a auto loan disbursement within 20 to 30 minutes. And I was really so shocked, and in fact very happy that this process of a very shortcut, first time heard in the industry, would help us to increase our sales.
HDFC have come up with a super fast sanctioning the finance for our customers. Super fast, I mean to say, in 30 minutes to 40 minutes without any intervention. Just give some small details and the bank will process digitally their finance, which is absolutely fantastic.
When we ourselves experienced HDFC Express Car Loan from HDFC, which is the end-to-end digital with their online approval, KYC, disbursement capabilities, we believe now financing experience will also be in our control. With HDFC Bank, we can extend the best car buying experience to our customers.
HDFC has come out with a product where HDFC can disburse a loan within 30 minutes. I think I must compliment the entire team of HDFC for bringing such an innovation to the auto retail industry.
Recently, I got to know about the Express Car Loan facility which has been initiated by HDFC Bank, and when I got to know about it, it felt that it's going to be a very interesting product, as they propose that it's going to take only 30 minutes to disburse a loan to the customer. And in the past week, I got to know that a couple of files were disbursed through this process, and it was lightning fast.
Team was excited to see this kind of end-to-end digital process for the first time without any documents. Customers are getting approval and digital disbursement, even KYC and video call.
I think these are the 6 tenets. The top 3 are the more fundamental ones. I would suggest you should keep these 3 in mind when you look at our business strategy, because we will keep hand in hand all 3. For example, a consistent, good quality portfolio, an absolute non-compromisable entity for us. If you look at, we would operate at the best in class yields and margins across industry. That will be our endeavor at all times. And of course, most consistent, prudent pricing as a result of that. If you look at the next 3, which I see as our strengths and things we're going to leverage on, the first right of refusal as an open market acquisition. If you look at most of our products, with distribution and entrepreneurs that we are working, we are very clearly have the strength of the first right of refusal. And that really means that we almost get the best quality credit, or probably the first set of best customers, because we probably process it the fastest, as well as our consistency of response. If you look at the indigenous products that I introduced to you, and if you look at the set that I refresh your memory with at the end of the presentation, you'll realize it's a substantially solid strength, I believe, that the bank and the retail assets and lending rests on. If you look at government business, I've specifically put this. I think this is offers a similar opportunity for HDFC Bank as it offered when probably HDFC Bank and private sector banks were launched vis-a-vis the public sector. I think there's a great opportunity here of private versus public on the business side. And I think considering the banks focusing big time on this segment as well, on retail lending, we've seen some fantastic growth rates coming in on this segment, and we see that as really growing. And a couple of our indigenous digital products will also make it much more seamless and across the table closure. You don't have to make repeat visits because it's much tougher there. Quick aligns on some of the businesses that we do as to what we are planning. Like I mentioned to you, on the unsecured, I see a very big strength coming out of the government segment. And we're seeing a very high accelerated growth on this segment. And we see that over the next 3 to 5 years as being lead growth driver for us, where opportunity is unleashing big time. And this is also collaborated with the fact that our liabilities is penetrating and our percentages of the public sector are substantially high. And that's going to unleash massive amount of growth here. If you look at the digital car loans that I showed, we believe that an industry first, 24 hours by 7, this should unleash a productivity edge on the auto side and expand our business, of course, subject to the car availability is coming in. If you look at the gold loan branches, we want 100% of our branches to be gold loan. Probably there will be some amount of infrastructure putting in on our new branches. We're making effort to put in the requisite space, and all of you are aware that gold needs a certain security and some 70, 80 square feet at the minimum. So all new branches, it's our endeavor to kind of strengthen it with that infrastructure. Also, it has a direct synergy with our rural and semi-urban strategy that we are putting in place. And I think we're putting in a lot of effort here. I see that probably yielding over 3 times our present distribution now, and probably by third quarter, we should probably get close to most of the branches that we are launching. The digital end-to-end personal loans. Today we have a 10 seconds loan for our existing customers. We are work in progress, and hopefully by the third quarter, closer to the end of third quarter, we should be in a position to do an algorithm based, a very smart option even for a quick digital personal loans for even non-account holders. And that should unwave the next level of agility and growth even on the assisted model, because we do believe the assisted model also will run parallel to an end-to-end digital model for a couple of years to come. On the expanding geographies, I think for retail assets, we're constantly expanding with speed, and semi-urban and rural in the home loan and unsecured loans to cater to demand of enhanced productivity, and we're seeing that we're setting ourselves ready for that opportunity to tap in. I think one of our strengths that I wanted to highlight was that the digital really leads to a substantial reduction in our TATs. And even if it's the customer is not fully digitally accessing us, we've managed to connect it, whether it's open market or slowly connected even to the branch, where the customer could be serviced in an assisted form and in a safe environment where he could actually be closing it, and the delight kind of stays exactly the way we had planned it for. Oops, sorry. Yeah. I think on the home loan side, yes, we've announced the merger, and we will take it as it comes in on the regulatory side. But I think on the home loans piece that we are looking at 3 fundamental tenets where we see that the bank brings in massive strength. One is HDFC Bank's strength on the corporate salary base and on our multi-product bouquet that we kind of connect up on the corporate side with multiple teams. I think home could see a substantial strength there. On the government segment, as I shared with you, we're putting in massive amount of focus, and I think that's another area where there's a fantastic connect of synergy, and we see that playing out very well on the home loan side. And one more big area, I think if you look at our first right to refusal at the entrepreneurs and DSAs, both for unsecured and for a couple of other products, I think that distribution is substantially solid, consistent. They work with us for 10 to 20 years. And I think that strength, a lot of them do home loans. And considering that we are market leaders in most bouquet of products, this itself should unleash the new level of strength for us on the synergy side. Analytics skill is the cornerstone for our backbone in terms of a lot of stuff that we succeeded, because a lot of stuff is not just technology, it's also the way our risk guys are able to connect the dots and unleash that strength, and plus added together the analytics arm both on the marketing side and on the risk side for us to optimize our efforts. I think over the next 3 to 5 years, we see robust growth rates with those 3 tenets that I shared with you. We see a consistency of us going in, and I think in my limited view, merger should add substantial value. A quick, before I close, a quick recap on the stuff we had done on the indigenous side. The reason I'm highlighting this is to just share with you the strengths, because at times a lot of us think that everybody does digital, but how many of them, as retail lending that I represent today, are able to launch indigenous products, which could be the first in the industry, not once, not twice, but we do it repeatedly. So you look at the 10 seconds we'd launched, it's a fantastic success. We do substantial business today. It opened up multiple doors for the bank. If you look at, one sec, sorry. If you look at the digital loans against shares, the loans against shares was not invented by the bank, but we did convert this to digital. What did it do? The 7 days became 3 minutes. And today, almost 80% cases get processed digital. A lot of them are assisted. But then imagine the convenience that the customer has. Even a branch could help him to close it. Similarly, if you see loans against mutual funds, the minute we made it digital, today we exude a strength of 90%. We didn't invent this product. We kind of connected the dots that it made the 6-7 days come down. It expanded our reach to rural areas massively. We had to have a couple of meetings with the regulators here because it's not an easy product. Even if you look at express loans, it's not a straight like a personal loan where it directly credits to your account. Yeah, the next one. I think this is a product that I shared with you. We're excited about this. By hopefully close to third quarter, we should be coming up and launching this. We have been more prudent on this one. This is an unsecured version. The idea was not just to launch digital products, but launch and sensibly build on it. And I hope we're quite proud and excited about it, but I think let the rubber hit the road and let's see how we pull this off to success. But the aim is to constantly challenge ourselves. There's nobody in the market that we really need to look up to right now. But I think the whole idea is that can we keep challenging ourselves and keep moving in a certain direction and connect the dots, whether it's on segments, whether it's on indigenized products, or whether it's building the framework for us to be consistent growth at sensible pricing. I think it all connects up to be a business model that can stay in business for years to come at sensible terms. Yeah, Ashish. Yeah. Thank you so much. And over to any questions if you guys have any. Thanks. Sorry about this. Yeah. I think this we need to change.
We can do a quick round of questions. I see a hand up here. If we could get the mic, to this table, please.
Yeah, hi. Yeah, my question is more towards gold loans. I mean, you've clearly stated that you want to be aggressive and you want to increase the, become a pan-India sort of a player. So my question is, what are the ticket sizes that you are targeting right now in gold loans, or are you sort of indifferent to it? And secondly, we've already seen a lot of, we can say, a pricing pressure in the NBFCs. Given that the PSU banks have been very aggressive. Now, even if the private banks are now getting aggressive. So how do you see this space entirely? Do you see a lot of migration happening from the NBFC space, or do you feel that the market, gold loan market itself is seeing a lot of expansion from here on?
Okay, before I think, Jimmy, why don't you take up the risk side, then I'll come back to this.
I don't think we get aggressive on gold or any other product. We're already a national player, and all we want to do is distribute gold loans through a larger and larger number of branches, and soon enough virtually every single branch that we have. Ticket sizes in gold loans don't really need to be regulated, because of course there are some norms, and you can't do more than 50 grams of bullion and that sort of stuff, and frankly we don't even do that. But you don't need to regulate it because it comes at a relatively granular level in any way. The thing about gold loans, it's an extremely low risk product if you get your operating risk right. There's minimal credit risk in a gold loan, but operating risk is what you need to manage. So the moment you've put in the right infrastructure, the right training and the right people, you need, as I think Arvind mentioned a little earlier, you need a very small area. You just need to have that infrastructure in place. You need it backed up. You need a cool 100% redundancy on that technology because you can't afford to get a single case wrong. And once you actually have the gold in the bank, it doesn't really matter what the ticket size was. It doesn't matter very much who the customer was. Of course, we have our filters and cutoffs, and we have them beyond VR. Historically, our gold loan customers have been a little different from what you would find in many NBFCs, but that may not remain, and it doesn't need to remain, is the point I'm trying to make. You control your operating risk, you will not have a problem in gold loans. It's as simple as that.
Yeah, no, and I think one of the reasons we are also rapidly expanding is, and we're planning it much better in terms of, because like Jimmy also alluded to it, you need a separate vault and a separate space of that 65, 80 square feet. And I think we're planning it much better. As you get it more in the semi-urban space and start getting into carpet bombing situation, I think gold can be a very high synergy, is the feedback. And I think that's where we're leveraging that strength. So where will we get our growth? I think we have a one way up from where the kind of size we do in gold. So I think that's where we should be able to build strengths on that.
And I said a little earlier, and I just want to repeat, we're not targeting nationalized banks and we're not targeting NBFCs. We're targeting customers. And I think that's a point I'd really like to express, because it's never been our strategy to look at somebody else's plate and see how much food we can take off it. That's not us. That's not us.
In case you have any further queries, yeah. Could we get the mic here, please?
In the morning, and also a lot of times we have talked about the pre-approved loans. Say there are something like a 77 million.
Sumit, you want to take that mic maybe?
So in the morning, Sasi was also talking about the pre-approved loan. Also, you have been talking about pre-approved loan. So just wanted to get a sense, out of the 77 million customer that you have offered a pre-approved loan, how much typically get converted at say year 1, year 2 or year 3? And second question is, how much is your mix of new to bank and new to credit customers in the retail portfolio, and what percentage you would be comfortable? Is it 25%, 30%, or 35-40% also you are willing to go?
Of internal customers?
The new to bank and the new to customers. So there are two questions. Out of the pre-approved loans that you offer, how much typically get converted? And second thing is, what is the mix that you would like to be comfortable on the retail side for a new to bank or a new to credit side?
So the new to credit we are very very cautious about. So I'll be honest and open about that. New to bank does not impact us because we have the models and we have the programs, whether it be auto underwritten, which is the straight through, or the manually underwritten. We have programs for everything in every product. The mix of internal penetration into products differs quite significantly. If you look at credit cards, we have an extremely high penetration, and I think Shashi mentioned the penetration that we have on auto loans, but you have to understand the difference there in terms of customer need. Everyone shops, everyone eats, everyone wants a card. But you need to first want a car before you can have the car loan. So there is a difference in the penetration due to the nature of that product itself. When it comes to how much we would be comfortable in terms of mixing the pre-approved along with the regular underwritten, we don't frankly have a target, and you could go to 100%, it doesn't matter to us, and I'll just explain why for a second. We are very, very fortunate that we have the largest and longest database of retail customer behavior in the country. And this allows us to do the analytics that we are famous for. I'm never trying to say that we are the smartest people in the world. Everyone is capable of doing it, but it's the ingredient that's in short supply. We are very fortunate that we have that. And because of that and the head start that that has provided us, as Arvind was saying a minute ago, we have to just keep improving what we are doing. Unlike a lot of what fintechs do, we don't just build models. Despite having better data, we don't just rely on the model that gets built. We actually overlay filters over those. And this is what allows it to be done successfully. Product by product, I can tell you, the auto underwritten portfolio of HDFC Bank has a lower delinquency than the manually underwritten. This is not because we are geniuses again, it's because we have the flexibility to control it. So take for example, March 20, we had a pre-approved base. We were able to truncate it to the extent we thought was safe in the prevailing circumstances at that point in time. We again have the ability to lease it again. We have a very large, you asked how large it is extremely large. We could probably make a new retail bank if we wanted to. But what we release out to the sales staff at any point of time is a mix of what we want to do from a credit perspective, looking at the macro parameters at that point in time. And of course, as I think perhaps Parag or Ravi or someone will explain to you a little later, what the marketing strategy is at that point in time, on who we wish to target and which products we need to put at that point of time. So that is a restriction. But otherwise, the base is huge.
But I think what's more important is that while Jimmy said we're not geniuses, I think we have a process by which we're constantly ahead of the curve. And that set of agility does, in my limited assessment, set us apart. And the way we have the courage, because every door that you start opening, it opens new doors, for sure. Otherwise, you'll not have courage enough to build your pre-approved, connected with digital, connecting all of that, and putting it to the customer for the end result to really work. But yes, it's a constant endeavor, by the way. The most time is spent in saying how your liability franchise, which is constantly acquiring customers, how the bank, which is acquiring, as you rightly said, on the new to bank customers, how do we connect the dots? How do we connect his information with his buy-in on giving him the bouquet of products in the most seamless manner? So it's like if you had asked me 5 years ago to now, I think a lot of the time, whether you call it the risk part of it or marketing part of it, we're constantly with these teams working towards to get future ready.
So, but 77 million pre-approved. So probably the most of the credit check would have been done. So just because what is happening is lot of banks are also offering a pre-approved loans and those things, but it hardly matters if the conversion doesn't happen. So I'm looking at it, out of this 77 million.
Ours is a big piece on actual disbursement.
By the way, I didn't say we have 77 million pre-approved in any product. It's not a number we put out.
In the morning, I think Sasi mentioned some number about 77 million odd product or the customers. So that. So how much?
But that's not the point. Yeah, please.
Yeah. So how much typically it get converted? Because every banks talk about, okay, boss, we have a pre-approved 10-minute loans and those things, but at the end of the day, it has to be getting converted. So
I can ask if you just ask Ajit or someone, we can give you what the share of pre-approved is in the portfolio.
A couple of these things we don't put it in the public domain. But I mean, it's a very substantial part of the strategy. That should give you a sense on
It's large.
how important. Yeah, it's very large. It's a very high focus because it's very large. And this is how it connects us to build our strengths. Because we have a lot of liability customers. And this becomes very critical for us not to reopen the entire open market chain and really build on this.
See, it's a very meaningful share as it stands today. But it could easily be made much larger if we wanted to. We don't want to take the risk. So that's the best way I can answer you.
Yeah.
If we could just get the mic from Sumit, just behind.
Yeah, just two quick questions. So one is, I see the launch of these new products. How do you solve for, how will these be nudged and discovered in the market? What is the strategy?
How will this be?
How will they be discovered by the customers?
How will they be discovered?
Yeah, because they're not going to think that the bank is, when they're thinking of buying a car, right?
No, so see, presently you have an online Google search where you go. So that's one touch point, just to give you a few examples. You have your distribution, physical distribution. So where do you go for car loans? Where the cars are, which is your dealers. We have counters at almost 100% of the dealers. And if you look at the telecalling setup, they themselves will be briefed. So virtually, whether you in your bedroom just say that I want car financing, can I close the loan right now? So from every touch point of the chain, we'll be visible to the customer. So our sales teams right now are physically embedded everywhere. So everything which does digitally will either be online without assisted option, or right now will run with assisted option, where you have an executive there, but with his assisted help, you can close it there, and he doesn't have to call you again. The loan is done and over with by the time the customer walks out.
So the question I'm trying to understand is that I get it that your delight of the customer delight goes up, the NPS improves, and the costs also drop. But doesn't it also give you the opportunity to create net new growth, which was, you could have already been generating 20% from the way you have been doing with your network expansion. Does this produce a layer of growth over and above your existing infrastructure? So can your assets grow at, maybe if they were growing at 20, can you do 25?
See, that's the whole idea. I mean, we didn't do this. See, I would assume customer delight, it consolidates your first right to refusal at the counters. It makes you, the customers talk about you. If you manage to close a loan in 20-30 minutes, I would assume you will talk to 4 people. And it'll create a kind of a bullwhig effect, and that's natural to happen. So every customer delight that we try and create in the bank, the idea is to create a massive amount of productivity, massive amount of good name out there, which starts leading into more productivities of various products, including the product that you're selling. That's the whole idea, including, look at rural areas. Now, rural is so much more fragmented. Even if you have a branch in any of the rural areas, and the more deeper you get, how many times are you going to go to the customer to pick up this document, that document? So let's say if he's got a teacher in a panchayat, you want to close for a two-wheeler or for that auto, for that matter, and the car can easily get dispersed in one visit. So I think other than the cost efficiencies, customer delight, word of mouth, I would tend to believe that it should be, we're very optimistic about it. But you have to be at the ball. I mean, there's no magic. You've got to constantly, I don't have a magic wand. If it doesn't work, we'll find something that works here. But we'll work. The attitude is, I'm just exuding that attitude. It's not some magic I have. It's worked so far. The first month has been fantastic response. But we will be at it.
Reading into your question a little more, if I can maybe be presumptive and read your mind. It's not just, it's virtually a new channel. But it's also very, very safe and low risk. All these people have been pre-approved. We know they are safe.
Not the express loans.
Not the express ones. Not the express ones. I'm talking about our pre-approved channel. So we know they are safe. And when they are safe, you would like to preempt the ability of someone to shop around, and you would like to give that instant gratification so that you do get the good low risk customers. So across our pre-approved base, yes, sorry, you're talking about the express loan, that's new to bank. But over here, we definitely believe that it's adding a safer layer. Don't look at a pre-approved 10-second loan as something that's higher risk. If you do it well, it's actually lower risk. I'd like to emphasize that.
And since you're with this channel, you're also helping the OEM close the sale faster. Are you also seeing conversations with OEM which are kind of pushing you and giving you some kind of incentive?
So that's the next phase. As a matter of fact, OEMs have their own APIs. We are creating our own. So that's not connected yet. But as they start building on it, that's what we want to do.
So you could even give the customer another reason to kind of...
I think it could be a larger platform. It could be more interesting where the customer could have an online car selection sorts from the dealer, which he can do partly now with OEMs. It could be even on his website, you'll have our option.
The smart buy like thing, where on smart buy you get these extra points which nudges you to do
We could look at it depending on what regulator allows.
Yeah. Okay, thank you.
In case there are no further questions, we'll bring this session to an end. Many thanks.
Thank you so much.
We'll quickly break for 15 minutes for tea and we'll reassemble. Thanks a lot. Thanks a lot, Arvind. Thanks a lot, Jimmy.
Thank you.
Thank you.